Hello everyone. After this fast check of the microphone, I want to thank the Ethereum organization and ETHSofia especially for making this collaboration with Capital newspaper so we can make this panel happen. Thank you as well. If you have any questions during the panel, please check the QR code and ask them. We will have 5 or 10 minutes to ask questions there directly. So guys, 2025 was the year where TradFi really shined, and we saw almost seamless integration with a lot of applications. Can you maybe, Vugar, you firstly say what is the most important thing that happened this year?
I think when we look at what's happened politically, I believe everyone knows what happened this year, and I think it's not much of an introduction what's happening in US with an industry, same in Europe. But I believe one key point that we need to focus what's happening this year is actually more traditional financial institutions like banks adopting the crypto. But on the other end, crypto is becoming less of an investment or trading tool, but becoming more of a truly infrastructure. First time we start seeing more and more institutions adopting technology the way it should work. We saw JP Morgan's and large banks adopting on-chain transactions for whether it's private or public for their transfers every day. But also we see that more and more institutions like Bitget, we are using the technology to power payments and transactions every day rather than just focusing on the trading end. Therefore, I believe this year was truly remarkable in terms of how we can build systems, end-to-end solutions on chain rather than looking at fragmented ways, whether how DeFi works, whether
Can you please
how
comment on something
works.
more specific, like let's say World Liberty Financial?
Oh, I don't want to name the names of the projects, and I don't think that Trump token or World Liberty was a remarkable act. Yes, some people definitely made some money, but in my opinion, the more fundamental changes like Genius Act could be a good example, how it reshapes the future, or the way the Bybit hack happened, which definitely reshaped how industry works and comes to overcome problems while Credit Suisse went down and nothing big happened in there.
Yeah, I wanted to give the word to Ivan as well. What's your opinion?
So I think, like we already said, this year has been really transformational in terms of the Genius Act and how the world has started looking at stable coins. From our extensive experience at Paysafe with consumers, however, there are still things that need to happen in the entire ecosystem in order for it to be really fully functional and reusable from end customers with regards to day-to-day payments. And so the few things that I'd like to point out that still are needed in order to move the needle there is first and foremost ease of integration. So just on the technology side, choosing the right protocol and the right integration to implement and making sure there is interoperability between the different integrations and protocols is really, really important and still not really an easy task to solve depending on where your business operates. Obviously, merchants need to be fully clear on their liabilities. They need to understand how they're able to best make sure that travel rules are actually in place, that they have the identities of their customers. And purely from a risk standpoint, they need to be clear on what the risks are that they need to mitigate. Like we all know, crypto is push versus pull, but essentially this dynamic creates a lot of opportunities for scam and other risks for customers. So managing those is really, really essential. And even for stablecoins themselves, right? We've seen stablecoins depegging sometimes. Then I think, purely from a merchant standpoint, we still see merchants in the e-commerce and retail space that do prefer crypto payments because of the lack of chargebacks. But also the flip side of that is that there is no consumer protection. And so consumer protection is a big piece that is really needed in order to solve consumer trust. And also speaking about trust, all of the trust cues that consumers recognize when they go through a payment flow are really important, right? Day-to-day customers would much prefer to go through payment flows like Google Pay or Apple Pay compared to going through something like MetaMask, which has a lot more friction in it. So on the UX side, that also needs to develop as well, too.
I get it. Can I cut you here and give the microphone to Petko, who could again share his opinion, but also add layer to your opinion as well?
Thank you. First of all, thanks for the kind invitation. Thanks for the organizers, including Capital, for inviting me on this panel. Now, very interesting things are happening. Let me just make a step back into where I'm coming from, because most of you are into crypto heavily. I'm coming from the traditional finance, so I am the kind of representing the establishment in this area. So what we saw in 2024, 2023, and 2025, of course, is a phenomenal growth into real world assets coming to the blockchain. This was quite phenomenal. So first of all, we see a lot of democratization of finance and a convergence of existing technologies like the ones that we had for many years and new technologies. 224% is the growth of the real world assets on public chains, which is great. So it's no longer a side experiment. A couple of years ago, quite a lot of experts in the area coming from my side were saying still crypto is perhaps a scam, or it will pass, or blah, blah, blah. Now they're turning their eyes towards the crypto community in a couple of different ways. One of them is they seek liquidity, so obviously they're coming for the liquidity. Second, they're coming for the market adoption. They see that on the UX side, a lot of things were happening, and people would like to see their assets, and including stuff which is like gold on their wallets. They would like to see obviously all their payments on their mobile phone, and including things like driving license. So a lot of things are coming on the UX side. But I would I made a cheat sheet prior to this panel. I would raise number one is the tokenization of real world assets. It's no longer news. That's, to me, it's number one thing. So what BlackRock did, what Franklin Templeton did, was phenomenal. So institutional loans is the second thing which is coming on the real world assets as on-chain instrument. And we are looking forward towards 2026 into tokenizing equities. This, to me, would be the next phenomenon which will bring, if not a couple of trillions, but a few more billions on the market. So this is a serious bridge between the existing TradFi and the DeFi market. Also, some of the experts see a lot of usability on the TradFi side they would like to bring to the existing finance. So this is also, I think, so integration is happening. Real world assets coming on the public blockchains. This is a fantastic news.
Vugar, wanted to ask you, would I be able to buy, say, NVIDIA on Bitget soon, or
you can already buy it, and that's the thing. Like, I think what Robinhood did in the beginning of the year is tokenizing. Today we are trying to tokenize everything. I am totally against the idea that everything should be tokenized, but definitely there's a huge benefit of tokenizing real-world assets or stock market, because this way we are able to trade things not only on our platform, but we can also trade things on the times that they're not tradable, right? Because stock markets close down, But through tokenization, I believe soon we'll be able to have true 24/7 markets, even if they don't operate in real world or in its traditional form. And I think that's incredible how far crypto markets came, and now we are pushing Nasdaq and New York Stock Exchange, or whether the other stock exchanges in the world, to actually kind of come and compete for the customers that is already investing within the crypto ecosystem.
A really short story from today. It happened today at like 2 or 3 a.m. I saw that Tether raised 20 billion at 500 billion valuation. Can you comment that, because it will be interesting?
I don't have much knowledge on that, therefore, like I won't be able to comment.
Yeah.
But maybe you can tell us more.
Yeah. It will be just realizing what is happening with a stablecoin provider this big is something really interesting to comment on your side.
Because like when we look at the stable tokens, because I work a lot with the European lawmakers, when we talk about stable tokens or stable cryptocurrencies, we usually think about cross-border transaction on a retail end, right? If you are having USDT-backed bank cards, or what retail does. But actually, the biggest implementation of the stable coins that also European lawmakers are kind of backing is about global settlements by the large companies. Because usually global settlements, let's say big providers, whether it is cross-border transaction by the petroleum giants like British Petroleum, or whether it's the Citibank that not only banks corporation but banks the government, when we look at the money movement in that kind of a scale, we see there's a huge delay through settlements or through US dollar clearing, and eventually stable tokens make that payments instantaneous. This way we will be seeing more and more global adoption of the currencies, cryptocurrencies, and on the other end, if you look at the tokenization, like Dubai ports are tokenizing almost entire fleet and entire the merch or goods movement. Same goes for Panama Canal and Suez Canal and many other large ports in the world like Rotterdam. This way we'll be seeing that more and more this big kind of transaction will happen through the stable tokens and tokenization, making all that settlement safer, secure, and faster, which will increase the velocity of the money. This way we will be seeing that a true competition, and I think that was one of the smart moves of the current US administration. They are not just wanting to bring the crypto to dominate the world, because the entire crypto market is around 3.5 trillion or something like that. It is almost as big as NVIDIA, just one company. But eventually, by pushing so much on a stable token legislative front, and eventually building through the Tether, Citibanks, and many other large players, we will be seeing the US or US dollars domination coming back, because the same way SWIFT runs on dollar, all big clearances happen in dollar. With the stable tokens, we'll be seeing that big corporations still will be relying on dollar for all cross-border transactions. And that's why whatever happening with Tether and all these big institutions, even you mentioned World Liberty, eventually they are trying to do US dollar one, kind of their own stable tokens. This is the biggest testament how the US trying to bring that dollar's dominance back in an international trade. And lastly, I want to mention one thing. Look from a bigger picture perspective. The institutions like Vugar, BlackRock, Templeton Foundation, they manage tens of trillions of dollars in the world, and just by tokenizing their own assets internally, but also having their own internal stable token, they can transact within their ecosystem and not rely on Citibank, on HSBC, on millions of dollars every day that they pay for transaction, eventually just to move their own money between their own sister companies or internal bodies. And we will be seeing more kind of a global perspective of stable token adoption that is very far from the retail, and it's more of an institutional adoption that will cut costs and make things much faster and better.
On that point, I wanted to ask Ivan, if you can pass the mic here. From a payment provider perspective, what needs to improve right now in these market conditions?
Yeah, I mean, I think we already covered, I think, the consumer perspective. Now, from a stablecoin perspective, I think the situation is similar but also slightly different, just because the times to finalize a transaction don't matter that much if you juxtapose that to like your normal bank settlement with correspondent banks, and we know the times for those services are really bad. And so I think like we already covered, investing in that space and expanding that market is actually a really strong case for crypto, and it really is the way to put crypto in more hands, in more treasury management systems across those large businesses. And to your point, helping those large businesses actually use a closed-loop ecosystem powered by those stable coins to very effectively and cheaply, almost in real time, move money. But I think the fundamental, really broad use case as far as businesses is concerned around payments really is settlements. And so settlements are going to be really the powerhouse and the real indication of large-scale adoption across businesses. And so we as a company really believe that is a space that is going to grow, and we want to grow in this space. So choosing the right partner there, however, the right protocol and the right integration is still going to be essential and crucial, just based on the geography and where you want to operate, right? As we know, basically Tron and BNB are really strong in Latin America and Asia, but really to enable other corridors, for example, US to Europe, Europe to US, we need better interoperability between those.
Can we pass the mic to Petko, because I want to check his site as well as a builder and as well entrepreneur site. What is the, again, most valuable integration right now for you?
Yeah. It's a very interesting question that you've raised regarding Tether, and I believe we kind of learned that with the new, was it 8 months with the new administration now, or 9 months, that everything seems to be around deals. So perhaps it's a deal that it's happening, and it's a deal regarding a more compliance and a more compliant integration of the stable coins. I think this is really happening. So obviously at one side we see the permissionless nature of the public blockchains and the public and the anonymity, which is a kind of I wouldn't say a conflict, but needs to comply with the expectations of the regulatory authority internationally. In Europe, this might be MiCA. In the States, it might be whatever's happening with the Genius Act, and it will be enacted a little bit later this and next year. But anyway, I see a couple of things happening: identity and compliance integration. So turning parties into more visible, more trustable parties. We now have the technology, so no longer the milliseconds are a problem, so the infrastructure could handle gazillions of transactions per second, 150 milliseconds, and less than a cent a transaction on the Solana network is technically peanuts. So we need more confidence that asset on-chain might and should meet the same standard as the assets off-chain. This is really a hurdle. It comes through perhaps a configurable permissioning, which is coming from the permissioned blockchains, privacy preserving compliance, encrypting balances, whitelisted validation. I wouldn't go into many technical details. A lot of collateral integration, and obviously this will make the liquidity coming from the public chains into more kind of a visible, still transparent, but a configurable permissioned asset on a combination of a public and private blockchains. This will technically enable the real-world assets to come from even billions to trillions in the next few years.
Then again, for you, what is the biggest unlocked for mainstream adoption coming, let's say, in year or maximum 2?
To me, I would read your question as what might be the bottleneck for the TradFi grade DeFi integrations. This would be building a compliance tooling regarding interoperability. Ivan mentioned this identity. We would like to see more identity integrated and embedded within various chains. And of course, building an infrastructure for compliant scale. Obviously, we need what from the institutional investment side I see, and also coming from the regulatory side is trust at scale. This might wrap up my statement regarding where are the integrations coming.
I wanted to ask Vugar the same question. What, depending on you, is the biggest?
I'm happy that you did,
catalyzer?
because I was about to jump. Because honestly, from our end, Bitget was around for 7 years, and all this time we were thinking how to build a better product, whether faster, simpler, easy to onboard. But then we realized that yes, it makes adoption easy. It is not scalable. It doesn't bring suddenly another 100 million users because now your speed is faster. What we realized, because we're a trading platform and it's kind of a built to trade, and that was the initial mindset from the beginning, that we need to onboard traders. Today we are the #1 copy trading platform with 200,000 traders professionally posting their trades, another 120 million people kind of trading one way or another. But we came to one key realization, that we won't be able to onboard next billion investors, next billion traders, but we can onboard next billion coffee drinkers. We can onboard next billion people who take a taxi every day to work. We'll be onboarding next billion people who buy something online. And payments actually is the next big thing, in my opinion, that will bring a true adoption, a mainstream adoption, crypto as a true mean of a payment. Whenever you go buy your coffee, you should be able to pay in crypto. As a merchant, you should be able to accept crypto as a payment. This way, crypto first time is truly becoming a currency. Because look from the perspective, the idea of Bitcoin was a peer-to-peer transaction. Today, we are very happy that institutions are coming in, and almost all the Bitcoin is now held by large institutions, Waves and people around there. Or think of any token in your portfolio, like probably you guys have XRPs, other Cardanos, I don't know, SUIs. How many of these tokens you actually use for the reason it's minted? Most of them you don't. You just hold the assets in hopes that price will go up or price will go down and you will make some money. It is a good investment tool, but actually the power lies on every time you transact. If you were able to pay in Bitcoins, if you are able to pay in Ethereums, or we transact in such a huge scale, that will be when the truly crypto will become a currency. Unless then, it is just an investment vehicle. And in my opinion, the mass adoption, we are finally there, where we are able not only just buy and keep and hope the price goes up, we are able actually to transact in between each other, whether sending money from one country to another or buying a coffee using your crypto, and that's where adoption happens. And that's why the stable tokens is also important, because that is how the corporations will talk to corporations, governments will talk to governments, and we will be seeing more and more money or crypto money used as an actual money rather than just buying something and hoping that the price will go up. And it's very important because, yes, Bitcoin is scarce, price always goes up, and we are greedy to go trade with it. But because stable tokens by nature, they're pegged to US dollars or British pounds, we are more tend to easily part with them and able to spend them. And that's how I believe we are on the way to onboard next billion users.
On that point, how are you, or maybe are you, preparing for the next presidential election, and what do you expect?
It depends which country's president we are talking about.
You know which country we are
if it is
talking
US
about.
president, I am not a US citizen, therefore I have no plans, and my company doesn't operate in the US, therefore we have no other plans. And I believe because as a technology developer, we shouldn't be much influenced by the political weather, rather focus on a political climate, and because
You are focusing on adoption, basically.
yeah, because we are focusing on more a long-term solution. As I mentioned, we invested in the middle of bear market, $30 million to decentralized wallet, where no one was talking about decentralization, because we wanted to build the next big thing that is coming after 5 years. And today, we don't want to think about what is next president doing, because then it will make us very short-sighted. And for anyone in this room, I'm sure a lot of you made some money through the Trump tokens, but when you look at the vesting schedule of Trump token, it's only 3 years because he wants to collect as much money as possible before he departs the office, while the person himself is banking on a short-term gains. Why we should care?
Petko, do you have something to add? Because, yeah.
Yeah, sure. First of all, I was very surprised positively by the new administration, because only a couple of years ago, probably parts of this administration was saying Bitcoin is a scam, if you remember this.
Yeah, they were saying the same, right? But now they just cashed more money.
Well, I'll put this aside. I would kindly, slightly tend to disagree with you on the crypto being used as payments. If we are talking about real, like international, worldwide adoption, I would be betting more on the stablecoin side. Less on the CBDC, although I was a big CBDC supporter in the past, but we will see even in Europe a very strong resistance towards CBDC. I don't think that the digital euro will be that successful as many people predict, and we already see some signs coming from the European Parliament, but this will be revealed in the next a couple of weeks. To me, I will bet on stronger adoption of stablecoins. If they come with a crypto token which is used as a utility token and it goes up, down, whatever, that's fine completely, based on the number of the transaction and the adoption of the particular blockchain. Why not? This is exactly why the crypto tokens were invented on first stage. But I will bet on massively on kind of stable tokens. But anyway, just let me finish. Sorry, I would like, and I think that if we use the Taleb's, who's, by the way, first of all, not a strongest supporter of Bitcoin in the first place, but if we use his term for anti-fragile asset, I believe the more anti-fragility will come if we move from treasuries towards public credit, private credit being tokenized, private equities, and why not alternative assets? This, to me, would be the what will make the whole industry work in the next
I would
couple of
agree,
years.
but also stable tokens, they're not as stable, right? If you live in Europe, dollar lost its value, and if you are an American and trade with Europe, dollar, like the euro, is around 1.117 cents. It means even the stable tokens, we see them, they're not stable as it is, they're just pegged to particular token. We see what's happening with Japanese yen and Chinese yuan. And in my opinion, just because there are 220 governments issuing money out there, we think that what is pegged to their currency is stable. But when you look at a global perspective, actually dollar is losing its value. And it means it's not as stable as we assume. Maybe we pegged something to the gold, but then is the gold, and that's why I believe why Bitcoin is becoming a gold standard, because this is the way that we see the value continuously growing rather than dropping.
Ivan, I'm sure you have a lot to add to this conversation, and again, after that, the real question is, what is the biggest catalyst for mainstream adoption in the coming year?
Yeah, so I think one very interesting experiment that people are already seeing being rolled out, and that actually comes from the likes of Visa and MasterCard already, is stablecoin-backed prepaid card. And I think that's a really good experiment that is going to show, how likely people are actually going to use crypto as a means to payment, because fundamentally, I think just from an investor standpoint, people don't necessarily associate assets with something that you have to pay with, right? This is why you have money as medium. And so I think there is also an interesting space where we have to see how Visa and MasterCard also respond, because they still have by far the largest payment network, and they own and they operate this network. And that network still has, a place and utility fundamentally to customers that any alternative way of payments have to basically match to, right, or surpass. So that's still a standard. So I think, like I said before, and we discussed broadly here, identities, being able to tokenize identities and being able to comply with regulations around source of wealth, around identity is going to be really, really key. And being able to tokenize this again gives an industry-wide way to effectively recognize and to do KYC. One very big problem in today's ecosystem is that you have a number of different services applications that all have to KYC you, right? And fundamentally solving that problem is a place where crypto can definitely make a significant difference. Not only as an investment means of investing, not only as means of paying, but also just as means of pure utility, and I think that's great. So yeah, I think a lot of different avenues to pursue here.
Yeah, Petko, can we discuss with you? I will add a new topic to our discussion. It's basically the stability of the US dollar and how stablecoins could maybe disrupt it. Could you give your opinion on the topic?
In the short term or in the long term? There are many. In
the medium term.
In the medium term, okay, cool. In the short term, I think the stablecoins will have zero impact on the debt. So I think we will all agree that the US debt is out of any control, and neither stablecoins will help or kind of disrupt this. When it comes to the stablecoins itself, this will embedding them with obviously with treasures. It will drive adoption. Now, when it comes to the dollar, I think it's primarily a source of their external geopolitical factors rather than crypto or anything we're doing, which lies down with the conflict in Far East Asia, which might be one of the key disrupting factors. Obviously, the different wars that are held near us also inflict, obviously, the protectionist policy of the America. Will it continue, or we will see more deals happening? We now see President Trump and President Xi Jinping kind of talking continuously on new deals. So to me, honestly speaking, I believe that the dollar is safe as a global value, but we will see more and more various CBDCs, various tokenized currencies to try to not destabilize, but to challenge this global leadership of the dollar. But as Vugar said, I think it's safe at this stage because we see more and more instruments embedded within the dollar, and this will continue with SWIFT on top of it, or kind of seeing more stable coins or global stable coins being enacted.
Vugar, something to add?
Honestly, I was like, we usually look into crypto and kind of try to learn what's happening in global markets. I want to do like a reverse psychology. You can think of like US dollar as a project token of US economy, and more transactions, there's more gas fees, right? And that's why US doesn't want US dollar to go out of power. That's why they so much invest in stable tokens, because SWIFT runs on US dollars, and if today we will have a system that uses the US dollar as a stable token, will generate more virtual gas fees for US economy. And that's how the world works, because it's not only for the US, it's not only about just like a game who's transacting how, it's also like a power game, because whether they print the dollars or whether they mint it, still it's the US dollars, and still the global economy runs on it, and that's why they are so keen to invest. And look also into the President Trump's the policy and the current administration's aspect, from the reserve announcement to any other big project. It is about the deals, it's about the technology they use, it's about who they invest, and it's only about the American companies. It's not about another Chinese company that will get a license to mint US tokens. Yeah. It is always the American corporation that is able to do things for American economy, and let's not forget that they just see an opportunity and make sure that they take the best out of it, but still keep it within the US economy or within that ecosystem of US economy rather than thinking anything else. That's why we see even like a price action of Cardano. We saw what's happening with XRP. We see how much there's a favor about for SUI, because all of them are American companies.
Like every other discussion I organize, I want the last 5 minutes to be about an essence you want to give to the audience, something we missed in our discussion, something you can add. So we can start with Petko. Basically, you have no question, but you have to give material.
Yeah, okay, so a couple of thoughts. I really want to ask you, what wouldn't you tokenize? This is something that, that you've mentioned briefly. So obviously, all of us are pro-tokenization of various assets. We're now working at INDUSTRIA and at R2 as well as partners towards tokenization, a lot of real-world assets and bridging them to the crypto world. This is something we're going to see at a later stage, a convergence. We are no longer going to talk, perhaps in the next 2-3 years, about crypto or non-crypto. We are going just to talk about finance. So we will see much more tokenization or just putting things on chain rather than tokenization or not tokenization. Most of the new assets will be designed with tokenization in mind, I believe. I would like perhaps someone else, perhaps probably Facebook at that time, later on Meta wasn't probably the right partner to create a basket of currencies. Perhaps someone will come with something smart as Libra, because Libra was designed to be super smart. So when we're talking stability, this might be also one of the stable.
But let's just hear again what he wouldn't tokenize.
Yeah, but let's hear what. Sorry, yeah, please.
I believe that when we talk about tokenization is a broad aspect, right? Because most of the things that we say they are tokenized, they're not actually fully tokenized. They have a token twin that represent them. Today, when we talk about tokenized US stocks, stock is not tokenized. There is a custodian. For example, I hold 1 share of Tesla, and now I give you a digital twin of it or token twin of it, telling that this represent it, but it's not actually a stock. You can have the token, but it doesn't mean you have a dividend yield coming from that token, because I am actually the shared holder. First, we need to kind of understand what is a token, what is a digital twin, and what is token twin or token representation of something. That's very important. Second, I saw that people now try to tokenize things that carry a physical value, but also things that doesn't carry. For example, you can tokenize a gold, a bar of a gold. You can tokenize non-refined gold, but can you also tokenize a gold mine? That's a very important question that goes on a policy end, because then how much things are prone to be manipulated. Also, when you look into the asset list, especially for the accounting people there, for example, you can lease a car, right? This way you own physically a car, you drive it, but the company that leased the car to you has that lease in your asset list. This way we kind of double the value because then there is a creditor and debitor. And that way we have to understand whenever we tokenize something, how much actually we create a synthetic value. And if we tokenize an asset, who is the custodian, the one that actually holds it, or you have all the rights to it. And eventually, I don't think that we have to tokenize everything for that particular sake. In my opinion, tokenization should serve a purpose, either make something faster, speedier, or cheaper. If tokenizing an asset doesn't make it more liberal, it doesn't make it faster or cheaper, it has no value in my opinion. And I can give you one idea. For example, we all use PDF, right? Previously, you had A4 paper. Today, almost all PDF protocols scans you that A4 paper. Is an A4 printed or PDF document is an actually digital contract? It is not. Then we have machine-readable contracts. Then we have smart contracts that self-do. And if we just kept printing that A4 format, we are not modernizing it. The same way, if today we take the title deed of an apartment in London that was a printed paper, now we just scan it and then we tokenize it on a chain, but still to access it, you go back to that PDF document, then it is not a true tokenization. And I think that's one of the big issues, that just for the sake of something, we don't tokenize things in a form of a tokenization. And lesson we learned was NFTs, right? We had pictures that became JPEGs, that became NFTs that were not actual NFTs, and we saw how speculation happened and died.
Either you were already talking, you get the last panel as well, so your essence, again, just in 3 or 4 sentences. The essence you want to give to the audience from today.
One advice I would give to the audience is that whenever, especially from the investment perspective, I think we are in a very interesting period where you can get an exposure through the tokenized assets, whether it is the stocks or the real world assets. It is the best time for you to kind of diversify your portfolio, even though most of the time I'm not a big fan of diversification. I believe you have to kind of go all in. But for people who are not here like a kind of a day-to-day traders, I would definitely advise everyone, or give a piece of an advice, that if you are building for future, definitely go and kind of get an exposure to everything out there, especially if you are dollar cost averaging. Because this is a very exciting time, especially what's happening, for example, in Bitcoin market. We saw so many Bitcoin all-times high, and I always say if you don't have a Bitcoin, probably it is the cheapest price point you will be able to get it. And lastly, one key advice I got from my mentor, and it worked for me, probably it will work for you, is that one of the best strategies is dollar cost averaging when acquiring assets, whether Bitcoin, real estate, or anything else. But I'll give you an advice. If you decide at any point to sell something, selling in the same way you bought, by dollar cost averaging the sales, is a great strategy to not maximize the gains but minimize the losses. And this could be my kind of a 2 cents dollar cost average while buying and selling, and have as many exposure points as possible, especially now that you can get tokenized assets, whether it is SpaceX that doesn't even went to public IPO, or whether it's the Tesla stocks. This is a very exciting time to be at.
Last but not least, I want to ask the same question, Ivan. So your essence, something you can give to the public, let's say, time to think about it.
I think personally, as somebody that deals with customers, actually trying to solve day-to-day problems, trying to pay, consumer trust is a real important aspect, and I think we all need to figure out as an industry how to best guarantee that and make sure that all of our customers feel safe, they feel that there is as little friction as possible, and that they're able to effectively pay. But it really doesn't start with the customers. Like we spoke, it starts with merchants. It starts with stablecoin adoption. It starts with closed loop ecosystem place, and so I feel like it's very important to realize where we are in that trajectory of the industry evolving right now. and really the time to go and do those things and really be crypto ready is right now.
Thank you.
I think that's the big takeaway.
I have a helper in the audience who is telling me we have a little bit of time for questions, so please let's bring them up. If someone has questions.
Yeah, so there were a couple of questions that actually, thank you very much, gentlemen, first of all, that came in through the very nice tool that we have. However, I would perhaps consider asking you, because I did see a lot of you leaving, and these questions came in quite a long time ago. Who has a burning question for the audience? And I will come right with you, to you with the mic. Feel free to shoot. I know it's the end of the day, but yes, excellent. You're still awake. Wonderful.
So, hi, I don't know how relevant this question is, but given that we are late stage bull already, what do you think will be the catalyst for the bear market? I guess we have to start throwing ideas because, yeah, according to the 4-year cycle, we probably have how much, 3-4 months left. Do you think like maybe it will be like some kind of against stablecoin scandal, Tether, or like the last time was FTX and Luna who kind of accelerated the downfall a little bit because BTC wasn't supposed to go to 16. I think there was some kind of...
I don't think in today's ecosystem we will need that big event to have a bull market or bear market, because we saw what happened to Bybit in the beginning of the year, and luckily there wasn't a domino effect. That's a very good sign. But because this is the only cycle we see that Bitcoin's price action doesn't have a full kind of a cycle effect on altcoins and anything else. Therefore, I believe we are moving being less cyclic in terms of the entire ecosystem. In my opinion, we'll be seeing more of like a bull and bear cycle of a Bitcoin alone, and then we will be seeing the entire market moving in a different direction, and probably we will be seeing a shorter, more frequent cycles rather than having these one big 2-3 year bull cycles and bear cycles that will be more of a coherent. And I think that is one thing we need to prepare as an industry, especially if you are trading or investing in the long term. And in my opinion, there's a very positive action of it, because today when we see institutional or individual investors that invest in a new project, we see that they still think of in a cyclic way, and they want to a project produce results within 1.5 years or 2 years maximum. But if we are able to achieve that kind of a less volatile but also more frequent cycle, we will be seeing more a long-term investment, in my opinion. To like kind of a short answer to your question, I don't believe we will need a big event happening to see a full cycle. Secondly, we will not be seeing a cycle the way we used to it, where Bitcoin price crashes like 4 times and then everything else crashes. And if you go see what is happening recently, we've been seeing Bitcoin all-time high every 2 months, and then we'll be seeing what kind of a market action happens. And we've seen so many days where the entire market was in red and Bitcoin was in green, which kind of confirms the theory.
After all, he's describing a black swan effect, and it's just that unpredictable. Do we have any other questions?
What is your favorite use case for DeFi, apart from stable coins, and what are you excited about, and something big that it maybe is coming?
Can you pick a speaker?
DeFi.
Sorry? To speak up?
No. Who do you want to answer?
No, everyone that is willing.
Okay, so it's up to you guys.
You want to pick it? I think I can answer from Bitget's perspective. We recently introduced something called on-chain, where we want to compete as a centralized exchange, compete with the decentralized world, where we are not focusing, because in decentralized world you can put any token, right, to be traded, and then you don't have this arbitrary body who decides, while you look at Binance, Bybit, OKX, and all of our centralized exchange partners, where we kind of become this judge who decides what to list. With Bitget on-chain, we actually give people a chance to trade on any token on-chain while still being within our ecosystem. And in the beginning of my talk, I already mentioned this. For us, like more and more products become a feature, and one of the biggest features is when you have an on-chain a product that can be traded within our ecosystem as long as user is already there and money is or liquidity is there. Why we limit them to, I don't know, 600 tokens that we listed while people want to trade more. And I think what DeFi is bringing is that liberal opportunity. Definitely it comes on a cost, but one thing we need to learn from DeFi is to give opportunity for everyone to participate, but still need to understand how we do it. And I think what we are looking now is the hyper-regulation in the US. They're trying to also regulate the DeFi, which will be a very interesting thing to see, because today DeFi is where everyone else who doesn't like regulation kind of goes. And I think that's one thing that, you know, serving to the industry in a different angle. The same way you had traditional banks, digital banks, and neobanks, and I think that is kind of a centralized exchanges, wallets, and DeFi. And this is kind of all coming together. Slowly, centralized exchanges are pushing to offer more DeFi-like services, but then also DeFi kind of adopting all the opportunities from the centralized exchange, whether it is yield farming or whether it's just like the way they talk to the customers.
I think though we have to admit that regulations bring clarity, and clarity is required for mass adoption. So I think we don't have to shy away from the fact.
With that, I have to thank you for sharing the stage with me today. I think we made something good. Thanks for the audience as well. And again, we can wrap it up.